Are we close to an AI bubble? A year ago, the easiest evidence was circular investment, AI companies trading equity and circulating cash in a tight loop. But today, the AI trade has graduated to circular financing. That's converting future demand expectations into a huge debt and physical infrastructure like data centers today. The center of it all is Nvidia, acting less like a dealer of GPUs and more like the central bank of the AI economy. To understand why, let's look at the buyers. Big tech's organic cash is running dry. Alphabet recently posted its first ever negative free cash flow quarter of about $5.9 billion in losses. Amazon had a negative $17.2 billion cash deficit in a single quarter. To hide this cash burn, these giants have built a $2.4 trillion shadow debt iceberg off balance sheet through uncommenced leases and future purchase commitments. To bypass these balance sheet constraints, hyperscalers lease capacity from specialized neoclouds. But under the hood of neocloud leaders like CoreWeave, the math is incredibly fragile. Last quarter, they generated about $2.5 billion in revenue, but posted a GAAP net loss of $626 million. On paper, their EBITDA margin is 56%. Once you subtract a $1 billion in quarterly GPU depreciation, their actual operating margin collapses to a razor-thin 1%. Traditional lenders will not underwrite billions against silicon that becomes obsolete in 2 years. So Nvidia is building the credit market itself, partnering with Wall Street to mobilize over $500 billion of private capital. The blueprint of this is in Pike County, Ohio. Nvidia recently invested $1.5 billion directly in developer SB Energy and provided a $105 billion site value guarantee backstopping OpenAI's 20-year lease. At about $24.7 million per megawatt, Nvidia's guarantee covers the exact cost of the non-silicon infrastructure, so the land, substations, and cooling. They are betting that even if the AI chips inside become worthless, the physical power-connected land will hold its value. So the loop is complete. Future OpenAI demand supports a lease contract, that contract supports debt, the debt builds a data center, and the data center creates Nvidia's revenue today. This has created the ultimate duration mismatch in modern finance. Lenders are underwriting 19-year infrastructure bonds maturing in 2045, and Nvidia is signing 20-year guarantees to fund silicon chips that become obsolete every 12 to 24 months. Setup eerily similar to the late 90s telecom crash when equipment giants like Lucent and Nortel collapsed after lending billions to their own buyers. Bubble or not, core question is no longer whether money is moving in circles. It's whether real-world economic demand outside the circle is growing fast enough to support the debt being built inside it. If it isn't, the industry has spent the future before it even arrived.